The global economy relies heavily on one thing, the US dollar. It's the dominant currency in international trade, global finance, and foreign reserves. But what if that's about to change? Right now, two of the world's largest powers, China and Russia, are actively working to reduce the dollar's dominance and replace it with their own currencies. For decades, the dollar has reigned supreme. After World War II, the Bretton Woods Agreement established the dollar as the backbone of the global financial system. Most international trade deals were done in dollars, and even today, more than 60% of foreign exchange reserves are held in dollars. This dominance gave the US enormous influence, but that influence hasn't always worked in everyone's favor. The US can impose sanctions, limit access to its financial systems, and print money when it needs to. Countries like China and Russia see this as a major problem, especially since they've both been on the receiving end of US economic pressure. Take Russia, for example. Since 2014, when tensions with the West escalated over Crimea, the US and its allies imposed heavy sanctions on Russia. These sanctions crippled its ability to access global markets and use the dollar in trade. In response, Russia began developing its own financial infrastructure to bypass the dollar. One of Russia's key moves was the creation of SPFS, a financial messaging system designed to replace SWIFT, the international network that facilitates cross-border payments. SWIFT is controlled by Western powers, and being cut off from it can cripple a country's economy. By 2023, SPFS was being used in multiple countries, reducing Russia's reliance on SWIFT. Meanwhile, China has also been working on a similar strategy. Unlike Russia, China hasn't faced the same level of sanctions, but it still views the dollar's dominance as a threat. That's why China developed CIPS, the cross-border interbank payment system, as its own alternative to SWIFT. CIPS allows international transactions to be settled in Chinese yuan, bypassing the dollar entirely. As China's economy continues to grow, so does the use of the yuan in global trade. Several countries have already signed agreements with China to conduct trade in yuan rather than dollars. But it's not just about creating alternative payment systems. Both Russia and China have been stockpiling gold. Why? Because gold is seen as a stable asset that can back a currency, unlike the dollar, which relies on trust in the US government. By accumulating gold reserves, they're preparing for a future where they might introduce a new currency backed by tangible assets. In fact, there's already talk of a potential BRICS currency. BRICS is a coalition of 5 major emerging economies: Brazil, Russia, India, China, and South Africa. Together, these countries represent about 40% of the world's population and a significant share of global GDP. At recent BRICS summits, leaders have discussed the idea of creating a shared currency for international trade. This currency wouldn't be tied to any one country's economy. Instead, it could be backed by a basket of commodities like gold, oil, and rare earth metals, all things these countries have in abundance. Imagine a world where oil deals aren't priced in dollars, but in a BRICS currency, or Chinese yuan. That would mark a huge shift in global finance and weaken the dollar's role as the world's reserve currency. And it's not just BRICS. Across Asia, Africa, and the Middle East, more countries are exploring alternatives to the dollar. Many of these nations have faced economic pressure from the US in the past and are eager to reduce their dependence on the American financial system. One key example is Saudi Arabia. Historically, Saudi oil sales have been priced exclusively in dollars. This petrodollar system has been a cornerstone of dollar dominance. But recently, China has been negotiating with Saudi Arabia to price some of its oil sales in yuan. If this happens, it could set a precedent for other oil-producing countries to follow. Russia has already made similar moves. After being hit with sanctions, Russia started conducting trade with many of its partners in rubles or local currencies. For example, Russia and India have increased their use of the rupee and ruble in bilateral trade. Meanwhile, China has been expanding its Belt and Road Initiative, a massive infrastructure project that spans dozens of countries. As part of this initiative, China often offers loans and investments in yuan, further promoting the use of its currency abroad. So what's the end game here? For China and Russia, the goal is clear: to create a multipolar financial world where the US dollar isn't the only game in town. They want to reduce their vulnerability to US sanctions and increase their own economic influence. But replacing the dollar won't be easy. The dollar's dominance is deeply entrenched. It's used in about 88% of global foreign exchange trades, and most commodities, like oil and gold, are still priced in dollars. Plus, many countries hold large reserves of US dollars and treasury bonds. There's also the issue of trust. The US dollar is considered one of the world's most stable currencies. For any alternative to succeed, it would need to gain the trust of global markets, a process that could take decades. However, cracks are starting to appear. The more countries diversify away from the dollar, the weaker its grip becomes. Even if the dollar remains dominant, the rise of alternatives like the Yuan and a potential BRICS currency could reduce US influence over time. And this isn't just about economics. It's also about geopolitics. By challenging the dollar, China and Russia are challenging US global leadership. This financial shift could lead to a new balance of power in the world. So, what does this mean for the average person? If the dollar's dominance declines, it could affect everything from the value of savings to the cost of imports. A weaker dollar might lead to higher inflation in the US and potentially higher interest rates. For investors, it could mean new opportunities in emerging markets and alternative currencies. Keeping an eye on how China and Russia's strategies unfold will be crucial for anyone interested in global finance. In the end, the question isn't whether the dollar will lose its dominance overnight. That's unlikely. The real question is how much influence it will lose and how quickly. As China, Russia, and their allies continue pushing for change, we could be witnessing the early stages of a major transformation in the global financial system. One thing is certain: the world of tomorrow won't look like the world of today. Whether it's a BRICS currency, increased use of the yuan, or a broader move toward multipolar finance, the shift is already underway. How far it goes remains to be seen, but it's a story worth following closely. And with that, we'll wrap it up here. If you found this video insightful, don't forget to like, share, and subscribe for more content on global economics and finance. Thanks for watching, and we'll see you in the next one.